Good morning, everybody. Welcome to the Flow Show. Here we are on Tuesday. Good morning, Stel. Good morning, Kay.
Good morning, mate. How are you?
All good, mate. All good. How are you guys?
Yeah, very well, thanks. Hope you
surviving.
Surviving. That's always a positive. A bit of a fairly quiet morning this morning. Few moves going on in markets, but we had a bit of a 8 a.m. man movement this morning, and that's settled down a bit now. But we've got some moves going on, so we'll talk about those in a bit. Firstly, we'll get through the headlines and data and stuff. I'm going to start in Japan, where we got a bit of data. We got some PPI data from the services sector, the corporate services PPI, coming in a touch softer than expected, 1.6 versus 1.7 expected and prior 1.8. We've also got this number, this BOJ core number, which isn't on a lot of calendars. It's not widely reported. It's part of a series that the Bank of Japan run complementary to the CPI data. But anyway, that core number that they measure came in much higher at 2.9% versus 2.4. Yeah.
Are you trying to share a screen because we don't see anything?
Is it not up there yet? What's
No.
going on there now? How's that?
There we go.
Better.
There we go. There we go. So there we go. There's that PPI number there from the corporate services, and this Bank of Japan core number up at 2.9 versus 2.4 expected and 2.7 prior. So one of their measures also showing sticky inflation in the core numbers. Moving on to his nibs, Ueda, who was in Parliament again. He says the shape of Japan's yield curve is smooth now. It's appropriate to continue easing with YCC, but we'll keep watching the markets functioning. If wages and inflation rise more than expected, the BOJ will tighten monetary policy, such as by raising interest rates. Inflation is led by cost push factors. Tightening now could cause a grave situation in the future. Finance Minister Suzuki was also out saying there may be some movements in Japan's monetary policy in future, which poses various challenges in sustaining stable debt issuance. Said we will strive to keep debt issuance costs low by changing maturity, distribution of JGB's issuance in accordance with any future change in the Bank of Japan's monetary policy. So a few flags being raised there in terms of if the Bank of Japan move to tightening, what will happen to government debt. Obviously, costs will increase for that. They've also got the bags of debt they're holding at the BOJ anyway. So I think it's a positive sign that they are making note now that there may be problems later. That means that they can go some way to address them now, rather than leave them till later. Now that comment from Ueda saying in what circumstances rates might rise or they might tighten is no real shock there. I don't think he's hinting at anything for this meeting, more a case of if X happens, we'll do Y type thing. So further down the line. Anything you've picked out of that lot from Japan, Kay?
No, the fact of over communication is what strikes me. So against what the market and some watchers may have expected them coming out with surprises, it does appear to me that Ueda is a guy who doesn't really like a lot of surprises, and the active communication with the government is still going on. So everything that is going to happen should be well telegraphed. I think he's telling us that nothing is going to change right now, because he says that there was a line there. I'm trying to get exactly the line back that he said. It's appropriate also to continue with easing with YCC, and then, as you say, if wages inflation rise more than expected, it's all going to be discussed. So that, I think, keeps us firmly into the camp that no move now, but they will probably come up with something in the statement saying that they are looking at everything. But the fact that they really communicate a lot has to do, in my opinion, with those articles or opinions that we had earlier, that if they would surprise the market, it could derail some market functioning. So I think he seems to be taking that up as one of his first roles and goals, is to not shock markets. And I think more than really what he said is the fact that how often and how they are saying stuff.
Yeah, exactly. And it's a completely different situation to, you know, the UK, the ECB, the Fed, where, you know, the natural twist is straight to hiking rates. You know, we saw inflation rising. Forget all the transitory stuff, but it got to the point where the central banks had to act, and they did, irrespective of QE, irrespective of everything that had gone on before and all the fiscal spending. That's what they did. It was almost like a light switch. In Japan, it's not going to be like that. They can't light switch straight to hiking rates because the amount of debt they're holding and the costs that they're going to incur if they do start raising rates. So it's going to be, when we've said this 100 times, it's going to be a slow process. It's going to be a well telegraphed process, and they've got lots to consider. So they're going to start steering this ship at some point, and but it's going to be a very, very slow move, as we well know. So coming over to the ECB now, and Schnabel said it's far too early to declare victory on inflation. Clear that further hikes are needed, but size of rate hikes is going to depend on incoming data. 50 basis points are not off the table. Villeroy said that faced with inflation, there may be a need for additional rate hikes, but he said we have travelled most of the journey. There may be need for some additional interest rate increases, but they must be limited in number and size. There's still no clear and convergent signs of a change in underlying inflation. Some wage increase catch up with inflation is normal. ECB's Makhlouf, a bit of a repeat, said based on evidence so far, too early to start planning for a pause in our tightening of policy. And ECB economist Lane, this is still not the right time to stop raising rates. The Bundesbank were out with one of their reports saying that the German economy likely grew in Q1. We'll be getting that data very soon. HSBC see the ECB slowing the pace of hikes to 25 pips in May and announcing a step up in the pace of QT from H2. Maybe a bit of a low one in the rate call for May, but we will see. And the world and his mate are waiting for the ECB to step up QT, particularly from the second half of the year, so in line with a lot of other people. Now, a bit of surprising data out of Spain. PPI showing a negative. This is significant because not only is it showing that input costs, producer costs are coming down, they are coming down more, or they are not rising as much as they were previously. So they're actually now coming down. All these positive numbers, in some big, huge numbers there, but all these positive numbers still means that things are growing. Now we're seeing a negative. If that continues, that's going to bring inflation down even quicker. So Spain has been a bit of a leader in terms of when things have turned. So that showing a negative number as well. Was it the US we saw, or Canada? It was Canada, wasn't it, that showed a negative number in their PPI the other day as well. So we need to watch just to see if we get a little bit of a trend in negative numbers. That's big news, because that means actual prices coming down rather than not rising as fast. So we need to keep an eye on some of the other numbers that are going to be coming out. But sticking with inflation and the UK, and Kantar said that grocery inflation was 17.3% in the 4 weeks to April 16th. That was down from the record 17.5% in the March data. So a dip of inflation by 2 pips, but still growing, as we said. And the UK apparently borrowed far less last year, by 13.2 billion than was forecast by the the Office of Bodged Responsibility. These guys who like to run the rule over what the Chancellor does and what the UK government does. They're as good as predicting stuff as banks are. Rate rises and rate decreases. Absolutely useless they are, in other words. But anyway, good news on the borrowing front there, not borrowing as much as expected. The BOC had a quarterly survey out as well, and most respondents saw interest rates at 4.5% at the end of this year, and then falling in 2024. BOC rate is currently at 4.5%, and they are on pause. So it's whether they stay on pause for the remainder of the year. We shall see. On the monetary front, the major central banks, BOE, BOJ, ECB, SNB, have taken down their swap operations they were doing. They had these operations running daily. They're now doing them once per week. That's a further sign that liquidity is okay, particularly surrounding the banking mess that went on. That got them raising it from once a week back up to once a day to keep liquidity and sloshing around from the banking stuff. But as that's dissipated, so is a need for central banks drawing on those swap lines with the Fed. Geopolitics, and Russia may withdraw from the treaty banning intermediate and shorter range nuclear missiles, say TASS, citing a foreign ministry official. Another one for the geopolitical risk pot for that one. Quite out of China today regarding any of that sort of stuff, but it's early days. We'll wait and see what comes from that. So that's all I've got on the headlines this morning, nice and brief, unless you two guys have anything that I've missed or you want to interject.
Nothing from me. I just want to reiterate what you said about that negative PPI print. It's pretty important. And, you know, we've been talking about year-on-year numbers coming down. Well, this is coming down a lot.
Yeah.
Theoretically, we need to see a lot more negative prints in pretty much everywhere on a year-on-year basis if we're going to be going anywhere near back to normal, whatever normal is. But I doubt we're going to be seeing lots of those. But anyway, big, I think, important number that.
Yeah, very much so. And we are going to need to differentiate the difference between inflation falling, as in positive numbers becoming lower, and inflation numbers going into negative. It is a huge difference, and will be a huge difference for central banks as well. But no real move in the euro or any currencies on that. I think we've got a bit of end of month going on at the moment. Quite some swift moves this morning. Particularly in euro pairs and euro yen, kicked off by Mr. 8 AM man. Is this just end of month stuff, Kay? Starting to kick in a bit?
No, I don't think so.
A bit of chasing and having to play a bit of catch up?
No, I don't think that's end of month yet. It's probably just some profit taking stuff, or and I think a lot has been China driven as well, with the break of the dollar China higher. I think that may be actually the bigger one. And then, as I was saying earlier, this is the week of the Bank of Japan, so I reckon a bit of speculation on the yen. For sure, people don't seem to be wanting to keep too many short yen positions into the Bank of Japan, as a bit of probably insurance, if ever there would be a surprise. But yeah, I think it's more to do with the break higher in dollar China, perhaps. And also, if you look at the yields are coming off a bit across the board, so that is driving the yen higher as well this morning.
Yeah, yep. As you can see there, global yields, as you can see, coming off. I wouldn't say hugely, but in bond market terms these days, that's fairly quiet, unless we're seeing, we're not seeing 15 pips anywhere.
We still done 15 BPs in the US 10s and about the same in the 2s in a couple of sessions time. So that's enough to weigh on whatever yen. And some yen pairs, sorry, have been reversing is a big word, but at least coming back down. The first support levels, and I think that's technically weighing on it as well. We see dollar yen coming back down now, back on that 33.80, but it's more like the Canada yen, Antipodian yen, especially the Aussie yen, looking fragile this morning.
Yeah, could be classed as a pullback in some pairs, but then in others you could say that might be starting to break some trends. But a lot going on this week for yen, so I don't know if people are positioning, or as Kay says, just squaring up a bit, taking a bit of risk off the table, as opposed to rather taking a side going into the Bank of Japan. You know, that's what markets can do, take risk off the table, and they can always put it back on afterwards. You know, it's a lesson all traders should really pick up on. But dollar yen, yeah, it's easing down a bit of a pullback there. I can't see this running anywhere too far, but I'm not the market, so I'll just go with the flow, as we like to say. So we've got a bit of a level down here at 80, been a bit of a on-off switch regarding the price. We have had little moves through, but if we get under there, hold under this 80 level, we could be heading for a little push lower. We'll see what the market wants to do with that. And as Kay mentioned, dollar China making a break above that 91. We've been flagging up. I've in with some buy stops last night, yesterday, got triggered this morning, so sitting in those. I know Kay's long a bit lower down, 91.50 I think. So we're going to see, it's not blasting higher, but it's looking well bid, so going to see if we get a move up. I'm looking at this area around the 95s, 96s. If we get a move up there, start to take some profit off and move the stops and see where we go from there. Are you got any particular targets for this one, Kay, or just letting it run as far as it can?
No, your zones there are pretty on the money. Seeing anywhere between 95.5 and 96.5, take some off, and then see if we can take the rest up to 7. I'm not sure whether it's powerful enough to go through 7. That's a bit early to say, especially with I think if dollar yields would pick up on the back of the data to come for the rest of the week, then there could be a fair chance we are going for a relatively fast test of the 7. But in current circumstances, not sure that we can break above. That's something that we will have to see if and when we get there, if it's still warranted for a move higher, or we just take everything off and call it a day on that one and see what happens around that level.
Yeah, absolutely. Euro sterling, it's looking a bit similar to dollar China in that we keep tapping this 60 level, and I'm beginning to wonder whether it's worth trying a little buy stop on this one as well. More of a shorter term play, just to maybe grab a quick 20-30 pip blow through, maybe get up to that 89 zone. But we do keep coming back to this area fairly quickly, and you know, as I keep saying, the more knocks on the door, one day the door will open. These series of higher lows, again, keeping it so we're not dipping very far either at the moment. I'm not expecting any rockets from this one, but if we do get a break, there's probably plenty of stops probably sitting up here, 65, 70s. Might give it a little kick up to that 89 handle as mentioned. So I might have a little sniff of that one, seeing what the price action does, but I'm not expecting this to go anywhere on the fundamentals or anything like that. Euro dollar had a little mooch up towards that recent high, didn't quite get there, which is always a bit of a signal for me that if we're gonna have a move back to a level, I want to see at least the level tested. If the trend is going to continue, I want to see a new high made, even if it's by a few pips. It just keeps the impetus going. But the fact we're coming up short of that level suggests that the sellers who are up here have parked the bus around those levels again, and there's some decent interest not to pass that level for the moment. The pullback's going to have to do a lot of work. You know, this trend doesn't really start changing until we get, you know, below this 109 handle probably. I haven't got the fibs in there at the moment because they're a bit too short term for me, but I might start sticking them on shortly just to get the gauge for that. But yeah, while we're below this area here, we're going to keep well down from this 111 area. But let's see where it pulls back to. If we get a move back to the big figure, it holds there. That's going to give this move a bit more conviction to have another crack at the highs. And then if we get a quick return to those highs, then chances are we might be breaking, and then we'll be on for that 110 level. Not a lot else I'm looking at the moment. Market's not doing an awful lot. CAD, we've pretty much had a little tap on the 50 fib of the move down from the top of the high, and this is playing between a channel that we've got going, or a wedge, whatever you want to call it, going on here. So that's pretty much bang in the middle of that. 136, 36 and a half is the next main level above up there. So if we get a push up there and we hold, that might confirm a bit of a range play down to between there and 133s. Above 136, maybe we're going to test the top of this zone again. The Luni can be a very good range player. It's one thing I've noted over the years. It can set up some very good longer term trading, should we say, where, you know, wait a couple of months and you get some decent moves like this, and it tends to play out very nicely. But here we're a bit in the middle, bit of resistance up here, but you know, gives short-term shorts something to lean on. But for wider players, yeah, we're bang in the middle. Kay, you got anything? Oh, Stel, you were going to
Yep.
today.
I'll have a look.
Yeah, it's still
trading world on
fire. Not much has changed from last time, but let me take the screen and go through what I am seeing. So first of all, we'll start with yields. Remember last week when I was talking about yield 10-year US, I put a little circle here, nice little confluence of resistance. We didn't quite get there, but we got a candle which touched it. So, you know, I'll take that as a touch of that level, and we've come straight back down. Yield still looking pretty soft, and but overall still trading within this range. You know, the lows 328, 29, the highs 360 and change. So for me, yields are a little bit still in no man's land. If you like to day trade them, go ahead. I'm not doing that. But overall, there is no direction from yields. So the direction in risk assets for now seems to be coming from the dollar and from other extra, not terrestrial, other external factors. So
don't start bringing aliens into it, mate.
Yeah, let's talk about the moon landing. No, I'm kidding. So the S&P is really toying with this 41.10 to 41.15. We've talked about this for the last few days, and look at the wicks here. They're very consistent, and it's bounced back every day, but it's starting to look a bit weak now. So it really, I mean, for bears, it really has to break now. If we don't, we have Core PC on Friday, isn't it? Friday, US Core PC. I guess we might linger around here until that number, which is the next big number, but it's starting to look a bit weak now. So before, I've been saying all along, I think the path of least resistance is to the upside. I was talking about 4,200. Well, I'm starting to have a few doubts now because we are spending so much time close to the support. And if the support goes, then really, I think we're heading towards 40, I don't know, almost 100 points lower. So 40.30 to 40.40 is probably the next area of interest. So, but it hasn't been broken yet. So, you know, we can talk all we want about this, but at the moment it's still holding. And, you know, we're seeing a little bit risk off everywhere. That's probably because the dollar is off its lows. But again, it's not really inspiring in any way. You know, this bounce in the dollar, we talked about it yesterday on Face and on the Morning Edge. It's really weak, this bounce. So I think with the dollar being where it is now and looking as weak as it is, I still think that risk assets should move higher. because there's an inverse correlation usually between the dollar and risk assets. So as the dollar weakens, the S&P drives higher. Obviously, there are other factors, geopolitical and what have you, and yields and everything. But just those two together, as the dollar weakens, stocks rise. And I think we are too close to these lows. 100.80 is the low, and it's dangerous for a retest. But again, for the dollar as well, we're in no man's land, unless we break below here or we break above these highs here, 102.20, which is also a little fib from the move higher. This is a almost 2-year move higher. As long as we don't break below that and we don't break above here, it's kind of a tight range where we're just range trading, and I fear we're going to continue to do that until we get to Friday. But nevertheless, we are close to this breakdown level. Metals, kind of as expected. Well, let's look at gold last. Actually, silver was the first one that broke out from the channel, and this is what we drew, and we are slowly correcting towards a retest. That retest and a bounce would be a really nice technical signal that we're going higher. I still think we're going higher. Will we retrace down to the the high 23s? Potentially we might have another buck to the downside. That's why I have as I got stopped out of that long. I took that third position from 24.62. I got stopped out at 24.98. So basically where we are now, and I'm holding my ammo for a retest here. So this is my plan for silver. Obviously, if we do break out above these highs, this is very, very bullish, but we're still a buck away from there. Platinum is another one we looked at yesterday, and this one is a lot closer to retesting the channel. Funny how pretty much all these metals are trading roughly the same way, apart from gold. Gold is a lot more steady these days, but platinum is about to go and retest 1065, 1070. That would also be a nice little technical level to take along. I think I am going to try and long there in platinum, not in large, but I'm going to try that. And palladium is probably similar. Actually, no, palladium is driven by Ukraine a lot more than the other two, the other three metals. But gold is the one that's really showing. Yes.
Still, when you say that palladium is driven more by Ukraine than all the others, can you quickly?
Yes. The world production of palladium, if I recall, is well over 50 or 60% from Ukraine and Russia.
Okay.
I need to check the numbers, but it's nothing compared to platinum, silver, or gold. It's it's really concentrated there, so that's a lot more influenced by the situation there. Good question, actually. Yes. Gold, as I said, a lot more resilient. I mean, this move from the 2020 to late 2022 lows has been really strong, and we are correcting, but we're still a lot closer to all-time highs than any of the other metals, and I think that we will take them out. Question is, how far do we go down? Let's have a look. So, well, these highs here, 1950-ish, 23.6 fib. That could be a nice little level of support. Why not? But as I said before, gold is really resilient. I've been reading, obviously I don't know firsthand, but I've been reading that central banks just keep buying and buying relentlessly. And the availability of physical is dropping, especially in silver, in the various exchanges. So, as long as demand is strong or stronger than it has been, and for silver specifically, there's last year there was a deficit, supply and demand deficit, and this year's deficit is also projected to be a similar magnitude. So that's clearly a big driver in these metals. And as I said, gold is a lot closer to the all-time highs. I think we still should have a little correction down towards 1950, maybe even a bit below, and silver hopefully towards 23.80 to 24, so I can buy some more. But in terms of the metals, nothing's changed in the way I see them, and I think Steve agrees as well. We've talked about them at length on the morning edge. What else? Oil is a crazy MF, isn't it? I think we could be filling this gap 75.50, 75.60. It's not that far now. We got close. We got really close a couple of sessions ago, but it is a very difficult one to trade. I'm not touching it. It's way too volatile for me, and it's not showing me any clear technical signs. So I'm not touching that. Plus, it's difficult to trade this. You try to trade futures. You have the yield curve, the futures curve to contend with, and usually it's upward sloping, right? So you're going to be, if you're long, you're going to be losing money. If you're short, well, you're taking a risk. It's tough. I'm not touching it. I'll leave it at that. Cryptos, let me take those out. Not looking very good, right? Like Bitcoin, 26.5. I think it's a very, very big level. We are toying with the 50 DMA at the moment. Actually, let's draw a fib while we're here, maybe of that. See if we have anything. Excuse me. Oops. Where the hell did it go? There we go. Okay. Oh, okay. 23.6 and the 50 DMA confluencing. So we're seeing last few days a little bit of is trying to contain this drop. It's a difficult one because as far as I'm concerned, or as far as I know, cryptos have been under pressure, not because of equities or the dollar. I mean, those have been relatively stable. It was, I think, on the back of those headlines that the European Union is going to be regulating. I don't know to what extent or what they're going to be doing, but if you think about the use of cryptos, and let's face it, I think less than 0.1% of crypto transactions are to buy stuff. The rest are to to speculate or to do things you really shouldn't be doing. And so regulation and this lack of if ever the European Union decides or in whatever way, I mean, I don't know how they could do it, but to not make transactions anonymous or have individuals declare everything they're doing, there's a million things they could do. That will definitely be a scare for cryptos because, let's face it, one of the big uses is, as I said before, to do things that really shouldn't be done. So
what do you make of this halving business that everyone's jumping up and down about, and everyone's calling for 50k Bitcoin, 100k Bitcoin after all this happens?
That's a good question, because halving is basically when it makes it even harder for new coins to be minted. But we've already minted, how many is it? 19 million of the 21 available or something like that. So as the further we go towards the limit, the less it matters. If we were at 4 million coins of 21 million, of course, it would make a huge difference. But now we're almost done. Actually, it would be nice if somebody can Google how many Bitcoins have been minted so far. 21 million, I know, is the limit. And I think we're getting really close. So yes, halving used to be a big deal, but I think as we get to the limit, it's going to be a non-event, right? I mean, it gets a little bit harder, but there's only so little left to mine. So
what? Just without going off on a tangent, what happens when we reach the limit? What happens to Bitcoin then? No one's going to be mining it. It's just going to be there to trade around. What happens to prices then?
That's a very good.
Does the bottom fall out because no one can mine it and and make the money mining? Do they give up and go elsewhere, and that causes a collapse? How does it work?
That's a good question, and because of its use, and because Bitcoin is not really used to buy things, it's used to speculate mostly. I think attention is going to be turned to other coins. I mean, for me, it's the logical consequence. So people keep talking, oh, it's a finite supply, which is great. Well, you can have an infinite number of different name coins, right? So I think attention is going to move to some other coins. What are they? I have no idea. What does Bitcoin become? If Bitcoin, in my opinion, and I could be wrong, of course, I'm a dinosaur. In my opinion, Bitcoin, if it doesn't get used to, pay taxes and basically if it doesn't have broad use everywhere, then in my opinion, it's going to become this collectible thing that people can speculate on. But I've always compared it to baseball cards, these rare US baseball cards where, you have this card costing $1 million. Bitcoin can cost whatever it wants to cost, whatever people want to pay to have it. It's the same as any rare item, because it is rare, right? It's not the real asset though, but it's a rare asset. So as long as people want to put a price on it and want to pay something for it, that's the price it's going to have. It's as simple as that. I had this a conversation with some of my friends. Have quite a bit of money. They're car collectors, and they have some really rare cars. And we're talking about cars like, the Ferrari 250 GTO, which is, $100 million or whatever it is. And I'm like, why would a car cost that much? And they say, well, it's very simple. There's only a few of them, and they're considered the holy grail. Same with Bitcoin. It's the one, right? It's the first crypto. So there is a certain rarity to it. 21 million will ever be made, and people will want it. So what's the price? Well, whatever people want to pay for it. That's what I don't like about cryptos. There's for me, no intrinsic value.
Yeah.
Right? Other than people wanted to pay X amount to buy it. That's my point.
And good luck. If you buy a car or if you buy a rare painting, you have like your painting and you have like the authenticity certificate, and then you pay. If you want to buy Bitcoin, like real own the Bitcoin, the 21 millionth, I don't know who has a PC to download a 21 million digit code just to own something,
Yeah, it's a long
stick on a wall.
It's a long conversation, this, and I'm sure a lot of people disagree, and I'm sure I'm wrong on some things, of course, but we all have our opinions, and that's my opinion.
I'm bid at $30, by the way. I don't want to have a download 21 million code.
And I'm bid a buck, bid a
K. Currency wise, but we talked about the dollar being kind of in no man's land. I have a feeling, or I think 2023 is not going to be a bad year for the pound. I think the pound will kind of grind higher as we go along. I think euro pound is going to keep grinding down towards, this big zone, which is around 82, 83 and a half. I think the cable has a lot of potential unless the dollar, starts ripping because of, factors other than currencies, right? If risk off happens, if something really bad happens in the world, everybody's going to want to buy the dollar. At least that's the knee-jerk reaction. But all else unchanged, I think the cable has a very good potential. It's broken out of this channel. It's still lingering around here, but it's still outside, and we really need to break these 125.4 highs. And if we do, I think we are going to be going significantly higher. I think we're going to be, I know I might sound crazy, but I think we're going to be going somewhere between 135 and 140. But one step at a time. The krona we've been talking about a lot. I'm still waiting for a rally towards 1080 to sell. Similar story with Euro Norway, man. This Euro Norway, every day I wake up, I want to sell it. And I haven't done, and I haven't done it, which has proved to be the right call. So I'm trying to sit on my hands a little bit more. This 1073 level is really close though. And I think at 1073, I'm going to start selling very, very small positions just to start. And I want to accumulate all the way up to even 12 if we get there. Euro yen you talked about before. This is one I'm looking at, and I have itchy fingers. I don't know about you guys, but the highs at in 2014, late 2014. And,
there's cream for that, mate.
Sorry?
There's cream for that. Just
Yeah. And we're now again testing these highs. Could this be a huge double top? Yeah, could. I'm really thinking about it. Maybe I might short some today even. I don't know. This looks to me very tempting with a clear stop above here. You know where you're wrong. Anyway, this is because you were talking about it before. This is one of the pairs that I'm closest to actually executing something. And other currencies, haven't looked at dollar CAD in a while. Yeah, this is why we're kind of in the middle. A big range, I know, but for me, it's again no man's land. One of the pairs I'm going to be the dollar pairs I'm going to be shorting if and when the dollar starts really looking bad. If it breaks below 100.80 on the Dixie, is dollar Norway, and the other one is going to be dollar Mex, which we have talked about many times. Nice carry being short as well, and you know, if we break, we are really lingering here. If we break below, it's just the abyss down here. I mean, really, what's the next level? Somewhere in the 14s, I think. I mean, and I'm not kidding. So again, another one I'm looking at. I'm still waiting for confirmation on the dollar, because the dollar is, with the yields being kind of static, the dollar is going to be the main driver now. So I think I'm going to have to wait for Friday, unless we hit any of those levels. Unless we hit Euro Norway or dollar Norway, those levels, I'm gonna take those. But that's it. That's it from me. And
Thank you, mate.
sorry if I offended people with my Bitcoin stuff, but hey, that's just the way I feel.
Hey, you know, why change a habit of a lifetime, mate?
Yeah.
Okay, do you want to have a little quick swerve around?
You guys already showed quite a bit. Let's yesterday I think I showed mainly euro crosses, so let's show a few yen crosses today, because we are getting closer to the Bank of Japan, and today with the yields coming off as well. And let's quickly have a look at the differentials and see those euro yields over the past weeks, actually. This is a short-term one, but those euro yields have been rising faster than the dollar yields. And today we saw a little bit of a setback. And as a matter of fact, it's not a lot. It's only, because it's a short time frame, it's only like 6-7 BPs, but it does cap the euro dollar. And then when the yields are capped, the yen takes over, right? It's still not, it's still one trade, as we've been saying for a long while, and it's still valid, regardless what happens to the Bank of Japan on Friday. But as I said, they've been telegraphing things so much that I really have the impression that they want to take surprise elements out of it, and going to prepare us for whatever will happen in the future. But the way they talk is also comforting me in my idea that they will, in some form or another, normalize further down the road. Whether it's June, September, remains to be seen. But June could already give us some hint at what they want to do. Change YCC, change the maturities, change the band. There's a lot of possibilities we will talk about. Yeah, it does seem that Ueda really wants to keep the markets as calm as possible going into meetings and what they have to do further down the road. But yeah, today Aussie dollar, and I think the Aussie also suffered a bit from what's happening in the Chinese yuan, and then I'll have a quick look at Aussie Kiwi as well, because that lost over 1% over a couple of sessions. Guess that has to do with a bit of Aussie RBA and New Zealand RBNZ perhaps divergence as well. But matter of fact, this Aussie is one of the weaker ones this morning, and Aussie yen broken this wedge finally around 89.70 this morning, and it's trading still very heavy. So this is your level to look at for on the top side if ever we get a retest and then start to continue lower. Or if it breaks back above, then this was only a small setback in a big upward trend. Keep an eye on what's happening around 89 figure 5. That should be your our first point of measurements, because we've also took off from that level. We also banged our head against it a while ago, so that level should have a little bit of a say here. If we break below, then that should really confirm this break, and we could be seeing a bit lower levels here, perhaps another big figure lower, who knows. But this being said, we are also entering end of month territory, so be ready for a few moves out of the blue, and I think first one really should start tomorrow. We're also going to run into more data starting tomorrow, and that could muddle the picture a little bit, make it less obvious to trade. But anyway, let's look at what's happening in another yen cross here. That's the Canada yen. Although oil has rebounded, the CAD yen finds it the Canadian dollar finds it very difficult to bounce right now. And the Canada yen here, look at that, 1, 2, 3, and it's looking a bit shampoo-ish, and a sustained break under 98.70 today could lead us a little bit lower again. This is about call it 180 or so points. That could bring us down to somewhere around here. If it plans out, if it pans out, and if it completely plays out. But just to show you that the yen crosses are much less bid today. If you look at the sterling yen, we did exactly the same here as in the couple of other yen pairs, testing those resistances and then shying away from it, and now we are slowly heading down to these mid 166s. Through there, we can see this kind of type of acceleration. Perhaps if it goes through there, we will have to keep an eye on that as well. But it's today more than the euro. It looks as if we are seeing yen pairs doing the main moves, and if we look at it, we are trading around these prior highs, which were also these highs here. We had a look above the October 2022 high yesterday, or even no, that was very early this morning actually, on the last leg higher of the euro, and then we are starting to reject. That's another yen pair that is rejecting. Kiwi yen is a little less obvious. I'm not going to show it. Quick look at the dollar yen, still in the wedge. Quick look at we are entering the cloud again, but the top of the cloud has been watered down over the past sessions. It's a bit too much of a yo-yo. But anyway, today it's around 134.08 in the dollar yen. But I'm putting that one aside for now until the Bank of Japan. But we are on the underside of this wedge and on that level that has been showing up a good number of times. So we are trying to keep it again. We did a 133.80, I think, or very low in the low 80s, and now we're back trading 133.90s. Keep an eye on that one, or to see if we get a move down there, and that could bring us nearly a big figure lower if really we get the break. If not, rangy stuff, I would assume. What else? Stell already showed Euro Noki, but I'm going to be quite interested in the dollar Noki, especially tomorrow, because tomorrow we're trading value date end of month. People in our room know exactly what that means. What can happen when we trade value date end of month with the US corporates, and I am going to keep a very, very close eye on what's happening in this dollar Noki. If ever we get a decent move up, perhaps tomorrow, I may start to get involved, perhaps in smalls. Anything else people would like to have a look at?
There was dollar Swissy that just did some last
dollar Swiss. What happened in dollar Swiss? What happened in dollar Swiss? As you can see, how often I look at this dollar Swiss. Yeah, it's on support, right? It's on support. Could be double bottomish here, and that's also a level that we saw popping up here when we continue to go higher. Yeah, so that's a pretty interesting level here on the dollar Swiss. Every time I look at the euro Swiss, barring the 5 or 10 points or 20 points rebound, it's still very, very heavy, and it's still very S&P driven. The S&P is still saying that they will continue to maneuver in Swiss franc to fight deflation. So that is also one of the reasons why the Swiss franc is so strong right now. So for as long as they keep the same stance, it's going to be hard to fight Swiss strength for more than a couple of sessions, perhaps. But yeah, it's an important level, and also probably coincides as well with that euro dollar up in those 110.5. So yeah, it's an interesting level around here in dollar Swiss, but I'm not inclined to have any positions in there. Quick look at yeah, what I was saying on this Aussie Kiwi. If you look at that, we've lost a couple of sessions. We've lost over 1%. So I guess that has to do with what is happening in the dollar China on the one hand, and then the market probably coming back to, hey, let's not forget that there's quite a bit of divergence now between the RBA and the RBNZ. We also have Aussie CPI coming, Q1 CPI coming up overnight, next night. I don't know if that's already a revision or a fresh one, but CPIs are drivers. We're expecting it to cool down as well as everywhere else. But yeah, that's a possible Aussie driver as well for tomorrow. There should be a little bit going on in this Aussie Kiwi around 108, but I'm not planning to touch it right now. Aussie dollar looking a bit weak. It's looking a bit weak, and we are making regularly fresh lows here. Rejected overnight again the 67.0515, and we're trading a bit lower. Keep an eye on here on this 66.5, 45.50. We're not far away from it. We're trading around 65 right now. Keep an eye on that one, especially after those CPIs and with what is perhaps waiting tomorrow. And Q is less obvious, although we are in this downward channel right now, and we keep banging our head now at that against that 62 the figure, but it's more rangy than Aussie really. It's less impacted directly by what's happening in China for one, and then as I said, it's got higher interest rates than the Australian dollar, so it's less obvious. We really need to break down back below 61.4550 to have a chance to go and have a look at 61, the figure 60.85. I'm still a little bit short, but I reduced it because I'm short a little Aussie somewhere as well. So yeah, it's a bit rangy, this one right here and now. And really, I think I'm gonna keep it to that for today, Ryan. Horatio, question: do yields worldwide relate to their currencies the same way as in the US, meaning higher yields indicate higher rates, and can be again the yen be paired against any currency if yields are moving? Yes, I just explained why, Horatio, right? Since the yen is an ultra low yielder, if the rest of the yields in the rest of the world are coming off, usually that's positive yen because the differentials are smaller, and the market is trading yen a lot on the back of interest rate differentials over well, it's been going on for decades, right? So and that is exactly the reason why dollar yen went up from 108, 110 to 150. That's because the US and the rest of the world were hiking rates, and Bank of Japan was holding the YCC still and still injecting bucket loads of money via JGB buying. And that's it for me, Ryan.
Thank you, mate. I'll take that over and just grab the screen again. I've just put up a couple of links for you folks. Just to remind you that if you want to come and join us on the ForexAnalytix platform, you can do so. There's an exclusive 20% off if you come via Forex Flow. Just use the code you can see on that page down there. Use that code FFL20. Also, we have the Traders Funding Program, which a lot of people are making very good use of in our chat room. Lots of guys here watching the show as well, using that as well. So please check that out. Also, link, as I said, is in the chat there as well. And if you want to come and watch me and Mr. Michael Brown on the trade-off, we do that. That comes out on a Tuesday. Don't forget to look out for Blake doing his one with Chris Weston. That comes out on a Thursday. So plenty more analysis for you guys and girls to get your teeth into. Lots of trade ideas, analysis and whatnot going on there. So please check that out. Finally, Ali wants me to look at oil quickly, so we'll have a quick look of oil before shutting up shop. Where is he? What are you doing? What are you doing, Ali? Short at 78, 74, 78, 84. And let's stick it on an hourly. And you're looking for 78.04. So not too far away. I mean, that's a pretty tight profit target there. 80 cents in oil is not a lot. Everyone's been, and his mother's been waiting for this gap to close. I'm not a gap believer. Price is going to go where it's going to go, whether there's gaps or not. But some people look at it, some people don't. But it seems that a lot of people are trying to front run this gap for another move higher. On your trade, you know where you're wrong. 79, so you stop at 80s. That looks pretty good, or just above this level here as well. So that's fairly good risk reward. We have seen a bit of a bounce, but why 78.04 is your target, Ali? If you get down there, why not take a bit off or most of it off, leave a little bit on in case it goes further? Maybe you'll get down to these lows again, and you've added a bit more. You can always bring your stop down and lock in what you have made. I just don't like to see traders giving up a winning trade. But if that's the way you trade, all the power to you, mate. As long as you make money, that's the most important thing. And on that note, we shall call it a day. Thank you very much for all your stuff, Stel and Kay, as usual. Thanks for coming to the Flow Show, guys. And we shall see you tomorrow.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.